Stonks. Who's familiar with the stonks meme? Well, if you love the stonks meme, then you're gonna love the health meme. The health meme. Hello everyone, how are you doing today? Today's Monday. Today's technically a holiday. Happy Martin Luther King Day to you. So, I'm talking about stonks today. Why? Because it's the holiday and it's closed today. You can't do anything today. It's closed. I have off in the morning. As you know, every morning I do this. This is what I do every morning. It's always a lot of fun. And I wanted to share with you a little bit something different that I do now, which is much more consistent with actually making some profits here, okay? Because I've talked about various things before. So as you know, I follow that one YouTube channel, and let me bring it up here so you can see. Probably watch it every morning. It's always very good. I usually only watch about half the show before I move on to something else, but this is what I watch. Live trading by Trader TV Live. Here are the three gentlemen who do the trading, and then the social media lady. There they are. So I watch them every morning, and as they do their trading. But what it is that they have a watch list every morning, and that actually helps filter out some of the stocks here, because sometimes if they do the work for you of actually finding some of the best stocks to actually look at, then that's one of the best things, because then I don't have to be looking at all this other stuff and deciding, okay, is that one good or that one good? I'm not really the best at that, so that kind of takes care of that for me. So I have my list of stuff, and then I've learned a lot from watching their live videos and actually what they do live. So some of what I do here, it's, I don't do exactly what they do. There's certain things that I do not do, and there's certain things that I'm not as aggressive with. I'm more try to be more patient, because I am fairly new with this. Just over the past year, I've been doing this. So, but this past week, it was a very profitable week, I would say. It was only like one day that was actually in the negative, trading these, in intraday. But yeah, I just wanted to share a little bit with you here. So look, here's one of my favorite ones here that I like. This is the Riot blockchain. This is crypto type thing. So this is for Friday, the 15th. Okay, so usually what I do is I draw out these purple lines. As you can see, these purple lines are drawn out, and they show me some support and resistance levels. So you can see kind of like when it begins, it goes down here, kind of bounces up here, kind of goes in this range, and then it goes up here for a little bit, goes down here, and it kind of bounces in this range, and then once it opens, it flushes down. So usually what I'll do is I'll have an order set. So like I'm looking at this, I'm looking at all of the different tops that it makes right here, and I'm like, okay, I could technically buy right around here if it breaks this, which would be about 27.90 or so. When it breaks that, and I could go all the way up to about here, which would be 28.16. So I could do that. Or, also for like the high of the day, I could, if this is technically the high, I could take a break past that, which would be 28 to 22, and take that up to like the next one, or even further above here. It all depends. You have to be kind of quick with it, because I notice sometimes things are going down. I'm like, oh wait, I got to put in my order right around here, because I see a huge bunch of people selling here. So if for example, if this is like 10 times or 13, no, hang on a minute. If there's a ton of people selling at a certain price and it manages to break above that, that means there's a lot of buys, okay? That means a lot of people are buying. So if there's like 1 million people selling at this price point, and it manages to all get bought up and actually go higher, that means there's a ton of people who are buying this that want to ride it up higher and higher and higher. So that shows you how much demand there is to actually get this thing up and going here. Okay, but as you can see, if I place my order, to purchase when it breaks this line, it would have never have actually been filled, I wouldn't have lost any money, because I technically wouldn't have bought, like let's just say I'm just going to buy when it goes down here, in hopes that it goes back up, but there's no indication that it's going to go back up. As you can see, it goes down, 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 down. It just And as for indicators, I'll only use two here, the VWAP one, and then this is the parabolic SAR, all these little dots here. And I don't use this the traditional way I guess people use it. What I do is I kind of use it as like, well, I guess you can use it as like a support and resistance line as well, because if you look, it kind of goes down here, and it kind of like hovers right here. So let's say, if I'm looking for this to go back up, I could say, okay, look, it goes down here and it starts bouncing above here. So I could end up purchasing right around this price. So that'd be like, let's say 26. Let's just say I end up going at about 28.6. I will get in. Okay, all right, I'm going to get in 26. And then just say I want to get out right here just in case it's going to bounce off this line. So that'd be 26.33. So that would be 30 cents per share. Or I could just take it right up to this next line. As you can see, it slightly goes above it, but for the most part, I'm going to try to follow these lines. That would be 26.77. So that would be a 70-cent winner there. And as you can see, let's just say, okay, you got to look at the direction of it. The overall direction is going down right here, but you got to look at it in real time. So if I kind of go over here, so you can't really see the edge, like it's going up, 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 up. Like, okay, I'm going to take out my profits once it goes right up to here, and then I'm going to reverse now. So I'm going to sell it up top here, and then I'll buy it when it goes down. You know, but I would only probably buy it if it goes down to like about here, or maybe like to this line right here. These dots also indicate to me like not quite a buy and a sell, but kind of as well. Like for example, again, I use this in a different type of way. So what I'll look at is right here. See how it kind of goes up right here. So once it actually touches this dot right here, it could end up going back down. But as you can see, it kind of broke up above it. So if it breaks up above it, I could end up buying around here. But as you can see, it bounced off this line. So that would be another thing. So if I do buy right here, my out is going to be right around this line right here. So that would end up being from, you know, $25.70 up to, you know, $26. I mean, I probably want to do right at 26. I would probably do like $25.91 because I don't like to do it right at even numbers. It may not even go up to 26. It could have gone up to, you know, $25.94 or something. So I like to lower that a bit more. So that's usually what I'm doing here. And there's a variety of other ones that I end up looking at as well. And I just follow this on the 2-minute time frame, you know, and I'm just kind of looking here, Here's how it can psych you out though, okay? Here's an example of a stock here. As you can see, this is the high of the day in the pre-market before it even opens up here. Okay, this is 11.50. Let's just say I want to take a break if it, you know, actually I want to buy if it breaks 11.50. But look at that. When it breaks 11.50, all it goes up to is 11.55. Usually when I place the order, I'm not going to do 11.50. I'm going to buy. I'm not going to do 11.51. I'm going to buy. Usually I'm going to increase it by a few cents. And usually it could be 5 or 6 cents that I could increase by. So let's just say I want to buy it when it's 11.55. If I bought 11.55, I would have purchased it right at the top here. As you can see, 11.55, and then it would have gone straight back down. It would have never gone back up, and I would have, you know, lost some money there. So if I do, it depends on the stock too. Like ones that are like this low in price, 11.50, I'll do it like 11.56 is when I'll buy. And as you can see, it never reached 11.56, so I would have never purchased it, and it would have never have gone in the negative, okay? But as you can see, even when it opens up, it's kind of still bouncing around this purple line and this purple line. Again, it goes up here, breaks through this, goes up to this one, a little bit higher, goes down to this one, goes up halfway, goes up to this one, goes down to that one, and then it finally breaks down through it, and then it goes back up through it, and then it just continues down. But you can see, I draw out these purple lines, and it kind of goes within those purple lines. And I draw these purple lines before the market opens. So all this right here, this is what I base my purple lines on. All of this stuff here, and then as you can see, it pretty much follows it. It pretty much follows it, and then it goes down, and then, you know, it'll end up breaking certain things, and that's like key levels there. So it ends up working out pretty well for the most part. But there's also other things too, like here's another good example. Actually, let me see here. Let me find the one that was like really good the other day. Actually, I think it may have been the other one. Yeah, it may have been this other one. Just a moment, let's see. Because there was an interesting one the other day that happened. It may have been like right here or something. I don't remember exactly where it was, but I remember once it opened up, as you can see, it kind of goes down a little bit, because this technically means it goes down here, this wick here. So I'm not going to buy down here because I don't know how far this is going to go. This could go in the complete opposite direction, just head down. But I noticed once this started to go down here, there was a huge sell around this area or so. I think it was like 26 something. Okay, it was like 26 something. And as I said, there were tons of people selling, tons and tons of people selling. So I was like, okay, I want to buy when it goes up past that. When it goes up past that, I'm going to buy. So I set out the order, so if it actually breaks that, and it did break it, and then it continues going up and up and up and up, and I ended up selling out. I want to say, like, let's just say I bought it when it broke. I think it was like 26.25 was the right there. So it was pretty much about where this purple line was, okay? And right where that red dot is. That is the other tactic that I use. Well, again, once it breaks that red line, if there's a red line there, boom, buy, go up. Let's just say I bought 26.25. I ended up getting out pretty much at this next purple line, which was 26.77. So that's 50 cents, but look how much higher this sucker went. This sucker went up to $28.70. 26.30 to 28.70. And I sold out right here, and it went up that much more. That's just sometimes how it is. But guess what? I would rather take a small win than a loss. So I'm very careful with what I do, because that's the thing. Look, it could have gone up right here, and as you can see, this red one. What if this red one continued on and just went the other way? If I didn't take any profit right here, I would have been in the negative. I would have lost money. So that is usually what I end up doing, and I think that ends up working out pretty well. And again, here's like another example. I'm looking right here. Here's the red line. It kind of goes up. I buy it right here. I end up selling out once it goes right there. So that's not always going to work, but look, here's another example of how it works. Look, red. Look, as you can see, look, it kind of just grazes the red, but it doesn't actually go past it. It goes down, 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 up, red. It breaks the red, and it breaks this purple line, which is very important. Goes up, goes up, goes up, and then I would sell at this yellow line. And right here, if I'm doing the opposite, if I'm shorting it, meaning I'm selling it first and then buying it afterwards, I see it break the green line. Okay, sell. And then I don't have any other lines here, but I could just look at here. But as you can see, it kind of goes back up, but then it goes down. And again, you really can't look at a chart after the fact. You have to analyze things in real time. You have to be looking at things in real time. This is quite a bit here, as you can see. I mean, it's hopefully I'm explaining it for people who do not know, but the only problem that I tend to have, and let me show you the one thing that I do have a problem with, because I take small wins, I also try to take small losses, and this can be part of the problem too. Let me show you. Here is one from Friday that I ended up messing up on. So this purple line here, it was about 26.50, okay? I think that is the break that I was taking, 26.50, and that's pretty much where this red line is too, as you can see. So I bought it once it broke above here, hoping it would just continue up. But as you can see, the next one, it went down in the red. The next one, it actually went down to here, and then it got bought back up, and it went up, 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 and then it went up tons. It went up tons. The problem is, because I take such small losses as well, like let's say I'm going to buy, right around here, 26.50, and I'm going to sell right here. Yeah, it did eventually do that, but guess what? It went down a little bit first. And if I had my out right here where the purple line was, guess what? Look, it went down here a little bit, and then this one went down here, and it broke that purple line. And I ended up getting out for a loss, despite the fact that it went back up. Mostly because I'm taking such a small loss, because I also want that small win as well, and I'm not actually. This is like the bottom for the day. So ideally, I should have put the sell right around here. But at the same time, it's like if I'm buying up here 26.50 and I'm going to be selling at 25.80, you know, that's almost like, it's not quite $1, but that's like 60 cents there of loss per share. And I don't really want to do that. You know, I didn't want to take 60 cent loss of share, because it's possible it could have gone up here. I bought, you know, up here, and it would have gone down, 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 then I would have taken the loss. But at the same time, if I'd held for, you know, just a little bit, you know, more than I would have actually done, you know, if I, you know, sold out right here, but I didn't do that. Because ideally, you want to look at like round numbers. As you can see, technically I would have put the stop like right, maybe 25.98 or something, or 25.97. So if it breaks $26, which I'm looking here, tons and tons of people, let's just say tons and tons of people were going to be buying at $26. That's the thing to look at. Like, okay, there are tons of people who are buying at $26 even. So if it breaks that, then that means the sellers are winning here. More people are selling it as opposed to buying it. So then I would have said, okay, sell. But at the same time, when things are happening this quickly in real time, you kind of forget about those things. You may not think about them. You may be like, I don't think it's going to go down there, but it ended up going down there. As you can see, look, it went down to literally 26.05. But if I set a stop at, you know, 25.98, 25.97, I would have never had taken a loss. I would have actually taken a win, taken profit right there. And as you can see, look, it goes through here, it breaks through here a little bit, it goes down, look, and then it goes down here and touches that green pretty much. And then it goes up, But when it goes up this high, this is not a time to buy. You don't want to be buying when it's up this high. It can work in your favor a little bit. You know, let's say you buy right here and sell right here. Yeah, you can make a little bit, but it's not, you don't want to be doing it when it's that far away from some of these key levels and these lines, because at that point you're just risking too much. It's really not worth it. So that is it for today. So I just want to talk about that. It's been a long time. Hopefully you stuck with me. If you're interested in this, hopefully you are. And yeah, the platform that I use is Webull. I can put the link in the description if you want some free stocks. They always offer free stocks. It's just absolutely amazing. It really is. It really is amazing what they offer here. Let me see how much stocks you can get today. You have to be a new member, though. You have to be a new member. Okay, so what they're offering is, look at this. 4 free stocks valued up to $3,700. Whew. How does it work? There you go. Get 2 free stocks by opening an account, receiving 2 free stocks, and you get the other 2 by depositing $100 or more. And that's if you use my link in the description. You have to do that in order to get those free stocks. You know? There's been plenty of people who have signed up. I have plenty of free stocks just kind of sitting there, getting, you know, increasing tremendously, as well as earning dividends. So there you go. If I take some losses, I have free stocks that pretty much makes up for it, you know? Since I am still in the process of learning and I'm getting a lot better, as you can see, I'm explaining it pretty well, I would say, but there's still some things that I need to work on, absolutely. But as I said, last week was an amazing week. I made a lot, and only had one bad day that was in the negative. Every other day was actually in the green by a decent amount compared to how it usually is. Sometimes it's just a little tiny bit in, you know, that I actually ended up making. But last week was actually a decent amount. So, oh, and then I should also show. It's one more thing that I do now. I use this website right here. This is FinViz, and I have a channel up signal here with certain criteria. I have over $7, over 200K volume, and over 0.5 relative volume. And I look at these. Now I'm looking for a channel up. What channel up is, like, see how it trades in this range here between these 2 lines? This is multiple days, okay? Each bar represents 1 day. This is for swing trading. So you end up buying and then you selling, you know, days or even weeks later, okay? This is what I've been doing now. This is actually one that I made some profit on. It's Surf. Surf's up, dude. Okay, so let's go to Surf. Let's go to Surf's up, dude. Okay, surf's up, dude. Okay, here we go. Surf's up, dude. Okay, so if I'm looking right here, look, see this nice green line? Look, each bar represents a day now instead of 2 minutes. See this nice green line? Look at that, it just follows it right up. And I have my purple lines here. So I'm like, okay, I'm gonna buy when it's closer down to here. I'm gonna sell when it's up here. As you can see, look, I would have bought, around $9 or so. Sold it at around $11.85, maybe even $12. That is how much profit? $3 profit per share over the course of January 5th to January 15th. So 10 days, you would have made $3 profit. Now, usually what I do with this, and I have a bunch of other stocks that ended up, look how crazy this one went. Oh my gosh, this one went absolutely insane. And unfortunately, I didn't hold it all the way up here. I did not. I sold it out probably like right around here where this line was, and it's like, whoa. It went another $20 in the money. $20 in the money. Okay, so here's kind of a good, probably not the best example. Let me try to find a good example here. I want to kind of find a really good example of some of this stuff here. Okay, here's probably a good example. Okay, this one is, okay, so as you can see, look, it goes down here and it kind of like bounces around this area. So I'm going to set a order for, see how it's kind of consolidating in this little range right here? I'm going to say, okay, once it breaks like the top of this one, okay, which is pretty much where this red line is, okay, I'm going to set a buy right around here, which is $117.58. I'm going to set a buy right there, and look, it goes up here. I would have gotten in right here, like, all right, I'm going to sell once it reaches this purple line, and then I would have sold right around here, 124. So it would have gone up from 117 to 124 over the course of, 2 weeks maybe. Yeah, 2 weeks or so to do that. So I'm not going to buy like when it's down here because I don't know if it's going to go back down. It's very possible it could be something like this. Let's say, oh look, let's just look right here, for example. Let's just say, okay, look, it's kind of going down here. Okay, yeah, I'm going to buy here. Yeah, it would have gone up a little bit, but it's like, okay, I'm going to continue to hold. And look, it's bouncing off this again. Oh, guess what? No, it didn't. It actually went down below here. And you may have, lost some money. So yeah, that's usually what I do for the daily, the swing trading. So, okay, I think I'm done talking now. That was a lot. So hopefully you learned something. Get those free stocks if you're interested in that. But yeah, it's been having a lot of fun with this. It's always a lot of fun, and I didn't do that today, so I thought I'd talk about it today because I'm not actually doing it. So anyway, you all take care, have a great one, and I'll catch you later, okay? Bye-bye now.